Hi, everyone. Welcome to the TimingResearch.com Crowd Forecast News, episode number 319 for November 15th, 2021. We are recording this at 1 p.m. Eastern Time, and this will be a preview for the Synergy Trader event, which will start immediately after today's episode, and will go until 8 p.m. Eastern Time tonight, and then tomorrow, Wednesday, and Thursday, we have a full day of presentations as well. So we'll talk about that a little more later. But my name is David Kosmeter. I'm the creator of TimingResearch.com. And today I have arranged for John Thomas, Michael Philliguerra, Wally Olopade to join us as our guests. And the option professor is back to moderate. So I'm going to go ahead and turn it over to him.
Okay, great. And again, welcome everybody. It's going to be a big week ahead. We got a lot of earnings coming up. We obviously had a very big run in the market. And again, a lot of people are thinking we're paused to refresh before we have another big run. And it'll be interesting to hear what all you guys think of it right now. Before we get started, let's introduce everybody. John Thomas, why don't you start out, a little background on yourself? I know you have a very long background, so we'll have to condense it a bit, but let everybody know who you are and what's going on at the Mad Hedge Fund Trader.
Call it diverse and eclectic background.
Exactly.
That's what someone told me the other day. Hi, I'm John Thomas, the Mad Hedge Fund Trader. Been in the market for 53 years. Let's see. Used to be the head of trading at Morgan Stanley in the 80s, set up their international division, ran a hedge fund for 10 years, and now I'm running the Diary of a Mad Hedge Fund Trader, market timing, global macro, Bitcoin technology, and biotech service. We have letters on all of those. And if you want to learn more about me, you can look at my ugly picture at www.madhedgefundtrader.com.
Perfect. Okay. And at the end, of course, give some different things that you're doing that people can participate in. Let's
Sure.
turn over to Michael Philliguerra and let us know what's going on with you and what's going on at your company.
And good morning or good afternoon. My name is Michael Philliguerra. I have been trading for over 40 years, and my background started as an options market maker here in San Francisco. I have traded in San Francisco, the London traded options market, the European Options Exchange in Amsterdam, the DTB in Germany, and then came back here to the US and to San Francisco. Currently, I have shifted. I am a day trader. I trade futures, and I have two websites. One is logicalsignals.com. The other is tradershelpingtraders.com. And I produce two video updates on the S&P and the NASDAQ, more for day trading.
Okay, sounds great. And Wally, a little background on yourself and what's going on at your company?
Absolutely. Wow. Well, I heard the other two guys, John Thomas and Michael, and I was like, wow, 40 years each. I was like, wow, I feel like the little kid over here, but I've only been in the market 10 years. And, but my forte is in quantitative and financial analysis. And so I bring a different approach. I don't trade options. I am more a quantitative and technical analyst. So more than anything else, that's what I am. I'm an analyst. And so what we do with our company is we teach people how to analyze data, how to see things before they happen. The whole reason why we call our company right side trading is because we want to make sure that we understand what's going to happen on the right side of the chart before it happens. So that's what I do. But we focus primarily on seasonality, earnings, and IPOs using quantitative and technical data to help us determine where these things are supposed to go.
Sure. All right. Well, we'll get into all this kind of stuff. But before we get started on anything, we always have the Monday morning quarterbacking. I guess it's not the opposite of Monday morning quarterback. We ask you what's going to happen between now and Friday. So we opened today at 46.89 on SPX, which is what I'm using as a gauge. So 46.89 was the opening. And from that price today till Friday's close, what's our expectation where we'll be? Higher, lower, same? And what's your confidence level? Let's start out in the same order. John Thomas, what are you thinking?
I think we chopped sideways with an upside bias. We're starting the Thanksgiving slowdown. But basically, we're looking to digest recent gains and blast up to new all-time highs by the end of the year.
Sure. And you're pretty confident of that?
Yeah.
Yeah. Michael, what are you thinking here?
I also think that we'll end up higher than 689, and eventually I think that we may sneak up and put in a slight new high before we pull back again, and then likely towards either the end of the week or the beginning of next week blast to new all-time highs above 4730.
Sure. Now, last time we were together, you had a pretty good technical situation in Fibonacci numbers. You were using a number of about 4724. This
Yep.
was when we were underneath 4700. We went up to 4720, which in my world is plenty close. And we saw about 100-point drop on the S&P off of that level.
Right.
Can you share with us where do you have any new projections on there based on
Yes,
today's
actually,
prices?
I do.
And, what do you have at the 38.2 level, and what do you have at the 61.8 level?
Wow. Okay. From the current, what I had to do is I redrew the Fibonacci extensions on this whole thing as one of the waves extended further than I anticipated. So I think that what we're really doing now is finishing an up move that began at 4625. So that's
right.
the most recent low that we saw last week.
Right.
From that level, 0.382 comes in at 4796. So basically 4700. The 618.
Did you say 4796 would be 4800?
Yeah, that's why I said 4800.
Okay, yeah, I thought you said something else. Go on. And so that's your 38 number, and what's your 61 number?
The 618 is 4902.
Okay,
And that's
so
what
that
we
would
could
really
eventually
suggest, as John was suggesting, that we're going to have the Pamplona run here at the end of the year.
If it goes that long, I think we might have that run prior to the end of the year.
In other words, this could be a front running of the Christmas timeframe, and then sell the fact when the Christmas sales come in.
It could, but I don't look at it as like, the buyers are stampeding back in. I look at it as a gigantic short squeeze.
Yeah. Or at
really,
least
all
squeezing the sideline money into the market.
Squeezing sideline money into the market, but if we take a look at how several of the options in the big Titan tech stocks are trading, that's really where it's coming from.
So you would put pretty low probability that the 4724 will hold.
That it'll hold the market back. Yeah, I put a low probability.
Very low probability. And the 4625 recent low, I think both you guys would say that's pretty secure as a low for the rest of the year.
You know what? No, I don't think it's that secure. I think if the market starts to break down below 4660, we got a straight shot at breaking below 4626.
Would that jeopardize the end of the year rally, or would it just be a quick shakeout?
Possibly,
and then
possibly not. I think it shakes it out.
Yeah.
And then I would look for a new low below 4626, and the next move would be a blast higher.
Yeah, kind of like when they brought it to 4200, and then the next thing you know, it's back to 4500.
Absolutely correct. Yes, pretty much exactly like that.
I got you. Well, like I say, there's more than one scenario out there, and
exactly,
like Larry Summers was saying, economists and everyone should appreciate a number of outcomes as opposed to just one, right?
Exactly. I agree with that. Yes.
Yeah. All right, Wally, back over to you. Quantitatively, I would imagine things look pretty darn good. So what do you think?
Yes, I would agree with you 100%. We expect markets to end higher this week. And so that should be everybody's, I guess, forecast, so to speak. Right now, chances of taking all-time highs out is very, very likely. And just in lieu of just what some type of quantitative analysis shows is that, we have options expiration coming up pretty soon. And so usually what you'll see is that price rallies the week of options expiration.
Well, that would be this week, right?
That is correct. And
yeah, so we got options expiration. But how do you feel about all these earnings coming out? We got we got Home Depot coming out. We got Lowe's coming out. Wednesday's a big calendar. Target.
All right.
Isn't Walmart out today, tomorrow?
Not sure.
Yeah, but you
What's
got NVIDIA coming out on Wednesday or Thursday, and then you got the Chinese stocks, Alibaba, JD.com, and you got all those guys, Macy's, Kohl's, Ross, and TJ Maxx. So
Very good.
boy, we're going to be hearing a lot about if that, and then we got retail sales. So we're going to find out if the consumer is really as crazy spending as it is. And if they comes out way on the upside, that would be very positive, huh?
Yeah, and interesting enough. So one of the things that we've been talking about with our subscribers is the fact that seasonality wise,
Yeah.
Retail, this is when the season starts kicking in.
Yeah.
Okay. So what ends up happening usually with stuff like that is earnings tends to be pretty good. I mean, unless something major happened, a catastrophe, something like that, what you see is either earnings are just flat, okay, or they do well. And so I think that's part of what happens. Again, we're heading into the holidays, so retail is definitely something to pay attention to. We see this as just a market that overall is ready to rally, like the other two co-hosts were talking about, or the panelists are talking about, and I think we should see good rallies coming up soon.
Yeah, you would believe me. And the only thing that would make me concerned is the popularity of the consensus. But again, sometimes everyone's right on something, right? Hey, John, I wanted to ask you because you follow all these companies very closely. Which out of all of these do you think would be a deal maker or a deal breaker out of the companies that are announcing this week?
It's almost irrelevant. What's happening is the market is excessively rewarding companies that do well, like Microsoft, Tesla, and Google, and it's excessively punishing companies that don't do well, like PayPal. So I think the game here in the whole industry is to pile on as many winners as you can before year end, so they show up on your year end financial statement and annual report to the customers, and you ditch all the losers.
Yeah.
So you look like a genius on December 31st. And what that means is buying whatever has gone up the most.
Right.
Tesla had that ballistic move, and selling whatever is done terribly. And
I've had four stocks here, John, that I personally got involved in lately, and it seems like there's a lot of money flow going into them. Boeing, Facebook, Micron, and Western Digital. Do you see that as some kind of a change of direction a little bit? Because
no, but what's happened is these stocks have gotten so cheap.
Right.
People are willing to take a long-term view, give them the benefit of a doubt. I mean, you're seeing that in PayPal too. People are salivating at PayPal, down 35% in 6 months when they know it's going to be $1 trillion company in 5 years.
Right.
You could say the same argument for, Facebook, less so for Boeing. Boeing is a call option on China.
Yeah, allowing them to do this max, right? Yeah. And it seems like that might go through, right?
Yeah, we're getting sort of a quiet behind the scenes rapprochement with China.
Right.
Through Biden. So all of the China plays could catch on fire if that keeps progressing.
Right. And the Facebook, you think that was pretty much at 315 was pretty much of a steal?
It was. It's still really tough to fault their business model. I mean, you can hate Mark Zuckerberg all you want, but the fact is it's an incredible business model. It's a near monopoly, and they're making money hand over fist.
Yeah.
I live in the San Francisco Bay Area, and if you're bidding against a Facebook employee for a house, you can forget it.
Right.
They can pay anything.
Right. And and 3 billion eyeballs. Until those eyeballs start showing a big break in the action, you can't fight that tape, right?
It's what you see in so much of big tech. All of the top players have near monopolies, and the moats to cross to get in their business are just impossible.
Right.
So they essentially have monopolies for life. until they're broken up, and then they double in value on the breakup, like GE is doing now.
Right. All right, I'm going to turn over to Michael, and I'm going to hit him with something he kind of specializes in a little bit with part of his activities, and that is in the gold and silver, which it appears have broken out, and it appears that they may have a large run ahead of them. But is that what your technical analysis is showing, or is it showing this is another head fake and it's going to tank?
Actually, no, you're right. It has changed. And what it's really put in is that I was originally believing that gold would continue, and this is walking or trading off of a daily chart, that the market needed to continue to move lower to finish a pullback that actually started at the all-time high. Gold, and that's 2089. And so, but it got stopped and it didn't come down. And there is a possibility that the whole process ends in a slight failure. And that would put the end of it back in August, on August 9th, when the market hit a low of 1678. And if that was the low, then what we're building on is we're building on a an Elliott 5-wave advance higher. And ultimately that then would be expected to take the market to new all-time highs. And what that then does is just completes a larger 5-wave advance on an intermediate degree. So I've always had that in the back of my mind that we still needed to go up and finish that. And you and I have talked about it. I don't really have any projections higher just yet, but definitely above 2089. And I believe that if it plays out the way I think that it should, we're likely going to be seeing something up or around 23, 24, 2500. And when it's because of the size of the degree, so it's going to take a while for it to get up there. And of course, then it has to have the backing of some fundamental ideas of what gold is or isn't going to be doing. So it kind of, on one hand, remains in what I term as a box, and that box is 1919 on the top and 1662 on the bottom. So
yeah, the last time we had this kind of setup that I can remember was back in that run where it went from like $150 up to $850 because inflation got so much higher than the interest rates.
Yes.
And this is the scenario we're looking at now. Bloomberg had a very interesting thing on how inflation, where it is now, really affects real interest rates, of course, and also the real earnings yield.
Right.
Because if you discount the earnings yield by the inflation rate, we are at a historic low on earnings, not a historic high. And if you discount the yield versus the inflation, we are also at historic lows. So the bottom line is that historic highs on the negative 120 on a real yield. So that is an environment where, the paper starts looking a little dodgy. And, I had somebody who lives in our community here was, just reiterating how central banks still are holding tremendous amounts of gold.
Right.
So although everyone is saying that crypto has replaced gold, maybe that is not 100% true.
I would agree that that's not 100% true. I think crypto is replaced gold with millennials. I've seen a huge run coming into Bitcoin and other alternate coins, and so that part I would agree with. But
yeah, no, I'm not dismissing crypto at all. What I'm saying is I wouldn't throw the baby out with the bathwater on the gold and silver.
I agree with you on that statement, and that is going to be kind of, I guess, the wild card that's sitting out there, is because our own central bank, yes, we didn't really ditch gold when we saw a lot of the, back when the euro was coming into play and going to be the currency, that a lot of the central banks within the European countries, the German, the Dutch, the English actually didn't, but a lot of them were ditching gold, just ditching it for fiat currency. So, but now I'm seeing that might be reversing.
Yeah, seems like it. John, did you have a comment?
I'm a miner in the Bitcoin market, so I'm heavily into all the discussions going on there.
Right.
And there's a theory floating around that since gold has miserably failed to react to the inflation play,
So far.
that it no longer is
Yeah.
useful as a downside hedge for anything.
Right.
When investors figure that out, they're going to dump all the investment holdings of gold, and then you only have jewelry demand for gold.
Okay.
And that means selling $10 trillion worth of gold and putting it all into Bitcoin.
Yeah.
And that
No, and
gets
that,
you
and believe me,
to-
that is a scenario that could unfold. There's no doubt about it.
and that gets you to Bitcoin 500,000.
Yeah. Well, like I say, the call is 100,000 by the end of the year. So we are 30 trading days away from it going to 100,000.
And
If these
the
guys are
way
going to be correct.
Bitcoin moves, that's kind of looking good. That's been
Yeah.
our call for
Yeah.
the last 6 months. So
Yeah.
I have a piece called The Death of Gold, which I'm about to publish. But
Yeah.
you know, the second I was getting ready to publish it, then gold went up $100. I thought I'd hold
Well, that's
back
how Murphy works. That's how
a little
Murphy
bit
works.
on that one.
Yeah. No, like I say, there's this is what makes a horse race is that there's more than one view on it. Right now, the tape is indicating that there could be something going on, but that can change very quickly.
Yeah.
And so the bottom line is yeah. I mean, some people are concerned about the custodian issue on the Bitcoin, and obviously the volatility. The way it goes up and down 50% sometimes. Like,
Well,
in other words, I was very big on Bitcoin in July because I thought GBTC at $25 was obviously a donation, but when it gets up high at 60 or 70 grand, I think it's I'm sometimes a little reticent to get involved because I know that pullbacks are really the best way to get in.
Yeah, absolutely. And dollar cost averaging.
And dollar cost
Because
averaging.
the
Yeah.
day-to-day movements in Bitcoin are totally random.
Yeah. But anyway, so we'll have to see what happens. Again, the gold and silver seem to be getting on their bicycle, but wouldn't take a couple of pieces of glass in the road to get them off the bicycle,
Yeah, but you got to admit, performance of gold for the last 2 years has been awful.
Yeah. Do
No
you
downside.
know Campbell Harvey down there at the University of Duke Fuqua School, Campbell Harvey?
Sure.
He's a pretty sharp guy. And he was saying that when he hears people say that gold is a good hedge against inflation, the first thing he says is that's not true at all. It's good over hundreds of years.
Yeah.
But in
right.
shorter periods of time, it can be very dodgy. So if you're going to say I'm going to hold it on for 200 years into my family and leave it in the basement, he says absolutely. But he says if you're going to be looking at 3 to 6 months or whatever, that could be very, very unpredictable.
Yeah, bribing the guards at the border when you're fleeing the country. Gold also works there.
Yeah. But no, I think, like I say, he has a good case in point in that over a very, very long period of time, there's no question it's a good hedge on inflation. But, like I say, if you bought it in 2012 for almost $1,900 and here we are 10 years later and it's at $1,800, it obviously hasn't hedged anything. So it's all according to where you get on the train.
Right.
All right, let's switch over to our quantitative man here. And maybe you could, Wally, you could share with us a little bit about some of the things that you're focused on. Something like you had Tesla right before it had that big run, which was a great call. And you've had other ones that have been very good. So I'm all ears. Do you have anything else up your sleeve?
Yeah, actually, very good. The last time I was on this call, I was with Sunny, I believe it was, and
Yeah.
she was talking about gold too as well, just as you guys are talking about gold right now. And back then I said, well, it's not ready. And I said, we're not ready to jump into gold at that time. And she said, why would you not jump into gold, Jen? And I said, well, one, seasonality doesn't kick in. That's one thing we look at. But then two, we were not seeing the data supporting that, money was really flowing inside. Well, that has all changed now. And so it's kind of interesting to hear you guys talking about gold right now, because that's exactly what we started picking up last week. And it said, you know what, whoever, I'll say this just like I said in Bitcoin back when we were talking about this, I believe in August, And I said, to quote, whoever does not get involved in Bitcoin is going to regret it. This was back in August, right before the
Yeah,
rally
sure,
up. But
sure,
wait,
sure.
well, I'm willing to take the same stance again and say, if you don't jump into gold right now, you will miss out on a good entry point. Way this is looking, this could easily, I mean, our analysis shows that this could rally for at least the next 3 to 4 months. Okay. Now, all that being said, I mean, is it going to be a smooth sailing, higher highs, higher lows every single day from now to then? No. But, if you come back 4 months from now, based on the data that we're looking at, it shows that we should see gold higher. And so I'm looking forward
Yeah, I
to that.
mean, we
and
could,
probably even
like
longer than
looking
that.
at that chart, Wally, we could have a pullback towards 1800, 1820. And then the next time we take out 1860 could be when we really get on the bicycle.
Very good point. And that's why I said, I'm not saying it's going to go higher lows from here on out.
Because the RSI is up at 70, maybe it backs off to 60 and then it goes from there.
Exactly. Very good point. Very good point. But for those who are longer term, like
why play the prices right? If the thing's going to be going to 1900, 2000, or 2100, why play the pin the tail on the price? Take a position and then put a part in here, and then obviously add to it on a dip, right?
Absolutely. So that's what we're looking at. And then, so then the second one we're looking at is Facebook. Facebook is giving us a really good entry point right now. Yeah. And so we're saying we love Facebook. We actually wrote about that in our report this weekend and said, get into Facebook, get into gold. These are two areas that we believe we can make money off.
Yeah, I mean, and to be honest, there's your 1, 2, 3 formation right there. You rally up, pull back, and that pullback was pretty much in line with the Fibonacci number, and now we're above there. So, you got a good place to put your stop underneath that 328, 325, 330 area.
Excellent.
And then you can sit tight and see how
it's
metaverse
like we say sit back and watch your money grow.
I think this guy's onto something too, because I have kids that are in this age group of metaverse, anywhere between 20 and 35, something like that.
Mm-hmm.
And they're really talking as if virtual is going to be totally the way of the future. John Thomas, you're a futurist. I consider you a futurist, John.
I am a futurist. I'm living in the future now.
In fact, rename the hedge fund thing. I am the futurist.
Yeah, I think it would attract an entirely different audience if I did that. Basically, a bunch of conspiracy theorists and nut jobs.
No, because I'll give you an outside looking in. So I've done shows with you a year ago, 2 years ago, and some of your statements seem fantastical. And I'll give you one in, for instance. Let's put up Goldman Sachs.
Yeah,
I'll just give you my John Thomas story here.
Go ahead. Goldman Sachs has been very kind to us lately.
Well, I mean, you were at 200 and change, and I guess it was over a year ago, 200 and change. You were like, this thing's going at $300, $400 a share. Yeah. And, when it's trading 155 and 175, and a guy starts talking like that, you start looking for the Jack Daniels or the Four Roses or wherever the heck you're on. You know what I mean?
Jack
Daniels, whatever you're on, but whatever you're on, there's the proof of the pudding. So, that's why I call you a futurist, because you don't look at today's prices. You go, what are the prices? It's kind of like a hockey guy. I'm not worried about where the puck is. Where's the puck going? And you are a very big believer in these companies. And you have been very correct in being that believer,
Well, if you're not a futurist in the stock market, you're in big trouble. If you don't think things are going to get better, and if you are unable to pick the winning industries, and there's really no more than 5 of them in any given time, 5 out of 100 listed industries, then maybe you should consider another line of work.
No, and you're not blind faith either. You go take the other side when you think something has reached a fruition.
Well, and I used to get, daily P&Ls from Morgan Stanley for 8 years. So I know that company really well, and Goldman Sachs has got to be pretty close to that. And I know that, we're setting up here for the golden age of banking, for brokerage, money management, all the businesses they're in. I mean, Morgan Stanley could sit and do nothing, and Goldman Sachs, and their business will double in 5 years because the things they trade just keep appreciating. That means more management fees, more commissions, all the stuff that goes into that. And they're both getting into Bitcoin trading.
If we looked at charts on Western Digital and Micron, could we see that there's more real estate to come here, or was this a pop that is going to fade? MU and WDC. WDC seemed like it's going somewhere. What do you think?
Well, Western Digital was one of our shorts for a really long time.
Yeah.
But
But is this the pop like we got to 68 and then back in the tank, or is this the real deal Holyfield coming out of here?
Yeah, it could be a short-term pop because Western Digital is not Google.
No,
You know,
they
and
don't
it's
have that
not
yet. But it's a
Microsoft.
data storage, is it? Is that what it is? Or is that Micron more?
They're more hardware oriented
I got
in
you.
the telecom area.
How about MU? MU is more data storage, which sounds like it might have a brighter future.
Well, MU is low-end chips. So no one paid much of a premium ever for Micron until there was this massive shortage of low-end chips. These chips that everybody's short, these are $10 chips. These are not $1,000 NVIDIA cards. These are the cheapest chips that the industry makes.
I got you.
And, everybody in the world shut their factories down last year because they thought it was the end of the world. Now all of a sudden, and Tesla took all the orders, by the way. And now everybody wants their orders back and they're not in the factories to make them. And that's a 3-year fix. One of my theories is that the chip shortage goes on a lot longer than anyone realizes. And that's why all the chip stocks have been absolutely on fire lately, including Micron Technology, put on 10%.
Hey, Michael, outside of the gold, was there any other things that you were kind of looking at, or do you want to discuss something on your short-term trading methodologies?
I continue to look at the altcoins within the crypto spheres. And again, as a day trader, there's so much to do in the various markets, particularly in the futures, there is enough to do, but what really kind of comes into play, because it does trade literally 24/7. And when we close on Friday, basically everybody jumps over into crypto and they start trading those, and that happens all weekend long. In any case, I find that I tend to go and drift over and I'll choose XLM is one that I like. Algorand, which is ALGO, is another altcoin that I like. We just made a great play in Anchor, ANKR. Bought it.
Let's take a look at a couple of these charts that you're mentioning so we don't just blow by them. Could you start out with the first couple of ones and we go one by one?
Well,
what was the first one, Algo?
ALGO, which is Algo, but I'll tell you, I don't know if you can pick it up unless you cover if you can get cryptos on your chart. Oh, you can.
Yeah. So read
yeah,
off a few of these.
it's on
these names. Yeah.
I see it. Great. Thank you. This particular one, I was catching it because I saw this upward slope. And so I was buying it 180 and then I bought some more about right here. And then it's sparked up to $2.30. And so that's a great short-term play.
And the RSI is holding 50, which is not bad.
Which is very not bad. So I continue to favor this, but my bid is right now 185.
All right. So what else you got besides Algo?
ANKR. This one I really liked, but it spiked up to 16 cents. And that's what I was looking for. So here again, I was buying on the lows. So I was buying below 12 cents and I bought it down and to that low at about 11 cents, I guess it was.
Mm-hmm.
And then you catch when they all run in and they got to have it. So you might have to sit and wait for a while, but the moving averages were in line. The charts were kind of in line, and then it spiked. Now I did not carry it all the way to 16. I got out of the bulk of mine at 15 cents. So again, it was a great trade. And so it's sort of like a wash, rinse, repeat.
What's the volume on this stuff each day?
This one actually is pretty good. Algorand has a little bit higher. But I'll tell you another
Are
one.
we talking about 1 million shares, 2 million shares, 3 million
It
shares?
comes in the dollar value.
Oh,
So, or actually that's how it comes, but it's like this one, you're getting upwards of like, 39, 40 million worth a day.
yeah. I mean, you would have to, because these are penny stocks.
Yeah. But here's one that I've kept my eye on. I own it from much lower, but it trades, you're talking like multiple zeros and then the number.
Right.
So, and that's Shiba Inu, which is an altcoin that caught as
dog coin.
SHIB. Just the, yeah. Now this one, look at that spike up to 0.00009. So, but because you can walk in and if you put in $10, you're buying 200,000 tokens.
Yeah.
So, I mean, and so this one tracks, but you've got to see, look at the slope coming off.
Yeah. Well, these
It's a dark thin line.
these are obviously very interesting, but it has to be said, obviously, that they're extremely speculative, and anyone who looks at it
Absolutely.
would have to
I mean,
know
but
that.
they're all is.
So you would only put in gambling type money here, but gambling money can pay off if in fact they run. So that's why people take
But
a
that's
shot.
it. But see, what I like about these particularly is you get the moves and you're not really tossing in a large chunk of change.
No,
I
you
would
wouldn't.
not walk in and say, I'm going to give $5,000 to Shiba.
Right.
That I would never do. I would put $5,000 into Bitcoin, but I would wait for it to pull back because
No, these are the ones that you take a very, very, speculative gambling money and you put it in there. And if you happen to hit on one, God bless you. But if they don't all go to zero for whatever reason, it's not going to change your lifestyle or anything like
but there are a lot of people that this is what they do. They get up and they day
Sure.
trade and they trade crypto.
No,
Right.
like I say, and for the people who want to do it, this is some way to kind of track it, right?
By the
Yes,
way,
it is.
my son has 2 Shiba Inus in San Francisco, and he told me there's been a massive Shiba Inu dog kidnapping breakout because you can sell these dogs on the black market now for $50,000.
Yeah.
All
So,
right.
I mean, it's just trying to, but it's also when you're drifting into crypto, because they're all being created by brilliant 20-year-olds. That's the blockchain technology and that's coming in, they're improving on that I agree with what Wally said, and I believe John said, is that crypto is not going away. Bitcoin is not going away because it's the blockchain technology that really fuels it to move up, that fuels it to continue. And because there are so many different areas that can use blockchain technology in the same fashion. But most importantly, what we're seeing is like, if you'll notice a lot of Bitcoin, what happened in Bitcoin, Tesla decides that, that Musk comes out, he says, I'm going to sell 10% of my Tesla holdings. Regardless of how he goes about doing it or whatever his reasons were, a lot of people switched over and thought, well, what's he going to buy? And so they thought, well, he's going to put things into crypto. And the thing that I think people need to understand is that Bitcoin and Ethereum and a lot of these, what they are providing for very large asset holders is the means to transfer it from one point to the next by cutting out the middleman, which is why we see Goldman Sachs, Morgan Stanley, JP Morgan jumping on the train. We can't forget that Jamie Dimon was the one who came out and was spitting nails at anything crypto, was garbage. Now he's jumped on and said, oh yeah, I like it. Why?
Now there's
Because
profit
it's
in it
been
for them.
cut
You know what I
out.
mean? They probably didn't like loaning money with a very little down, but there was money in it,
No, what they didn't like is being cut out of the transfer process.
Yeah. Well, like I say, this stock MSTR, aren't they putting like all their money? They're sending out bonds and buying crypto. John, now you would know a little bit about this, wouldn't you?
I actually made $1 million on MSTR
There you go.
from July to this month.
Uh-huh.
And their net asset value has doubled from I think it's 400 billion. No, that's not right. Yeah, 400 billion to 800 billion. Anyway, it doubled wherever the base point was. So yeah, they borrow money at either 0 or 1% in the convertible bond market, and then put all of the money into Bitcoin.
Right.
And
they have
that
short
has
interest. They
proven
have
to
short
be-
interest of 21% right now. So that it could even turn into a meme stock, right?
Squeeze.
Yeah, and I know Michael Saylor, the CEO, and
Yeah, I've seen him on Bloomberg quite a number of times.
he
He's a good guy,
thinks-
sounds like.
he thinks that Bitcoin is going up to 100 times from this level, or over 5 or 10 million.
Yeah, and the company, though, I'm looking at the EPS and it says minus $45 a share. So is it possible they're losing money yet the
No,
Bitcoin?
I think that's a bogus number, because their core
Okay.
business also makes money.
Okay,
But maybe that's a change on the day or something.
I don't know. I'm just reading
But
it
the
off the machine.
Bitcoin has been, he's been doing this Bitcoin strategy for 2 years.
Yeah.
Back when it was, at 4,000,
Mhm.
and owning 100,000 Bitcoin, you move from 4,000 to 66,000, you make a hell of a lot of money.
Oh yeah, the 52 range on it's 192 to 1,315.
Yeah, right.
So it's a volatile little sucker, that's for sure.
Well, also the implied volatility on the options are double the normal market.
They'd
So
have to be.
doing
They'd have
call
to be.
spreads, you can get a 200% return in 6 months for at the money call spreads.
Yeah.
And that's what I've been doing.
Writing calls against it.
No, doing a call spread. So
Okay.
buying an at the money,
And then write the out of the money.
selling short a call $30 higher.
Yeah, yeah. And that obviously brings in all that cash to reduce your risk on the other side.
Does, absolutely.
Wally, I want to have you jump in here and see if you've got any more ideas for us. You said gold, you said Facebook, but I don't think you're a 2-horse kind of guy. You got any more horses in the stable?
Oh, no, that definitely not 2-horse. So one of the things that we also started looking at is this whole transportation index and retail, like I said, simply because obviously, again, seasonality comes in. We know that we're heading into the holidays. I always tell people it blows my mind why people do not pay attention to seasonal patterns. It's something that happens over and over and over again. You go into any Walmart right now, the one decoration you'll see all over the place is Christmas. Taking that simple logic and just saying, okay, who can benefit from this holiday season, right? I mean, they skipped over Thanksgiving altogether.
Right.
And so for that reason, it's like, what are some of the retail companies that are doing well? And the Columbia Fish is one of those that we started seeing beginning to do well, that they said, look, pay attention to that. Now, it might not do as well as some of these cryptos. I get that. But one of the things I always tell people is consistency over profits. Consistency over profits. If we can find stocks that we know can consistently move, so much so that we can literally predict when the move begins and understand how much we're going to get out of it before we get into the trade, I would choose that all day, every day. And so Columbia Fish, the Nikes, all these different companies are beginning to set up. And I don't think it's coincidence that these are beginning to set up right about now, okay? And then I say, pay attention. Like right now, we don't see the setup quite yet on the transportation. So we're looking at FedEx, we're looking at UPS, we're looking at the airline companies as well. What I like about them is that, they've pulled back. And so now we just need them to give us some type of a buy signal to tell us they are ready to start heading higher.
What about the rails, UNP and CSX? They were
Absolutely.
doing great. Are they still doing good?
Again, they all pull back, which
They all
is
pull back.
fine. I mean,
Yeah.
every single one of them have pulled back and gone sideways. But to me, it's the perfect setup right before the holiday kicks in. I mean, next week literally is Thanksgiving, for crying out loud. But I think that these are kind of stocks that we are paying attention to and saying, watch out for retail, watch out for transportation.
Well, what about these
railroads, and all
three
that
companies that are announcing this week? TJX, ROST, and KSS. Is there opportunity in those?
So yeah, again, every single TJX is actually something we were looking at too as well.
Yeah, that looks like it has a 1-2-3 formation ready to go too, right?
Very, very ready to go. Like look at that. If anybody understands candlestick patterns, we're looking at a bullish Arami signal that gapped up today. So now it's just, again, I know earnings is coming out, but again, seasonality wise, these stocks have done well during.
What about ROST? That's Raw Stores. Let's see what's going on there.
Stores. Yep. Very good point. I mean, honestly, it's one of those things where I always
ROST.
ROST. That's correct. I tell people, I say, you ever heard stories of, they talking about kids in a classroom, 5-year-olds, and they picked any stock and they all did well. I said, chances are they picked it right around Christmas time, right?
Yeah. How about Kohl's, KSS? We got something going on there, because all these three, if these guys announce big earnings, it looks like the stock, well, this one not as much, but it looks like Ross and TJX, if they got good news reports. John, what do you think? If they got good reports this week on their earnings, does that chart look like it could pop? John Thomas. We lost John Thomas.
All right.
All right. Well, anyway,
so
I was going to say,
if it pops on earnings,
yeah,
then again, I think this is one of those things I think people should not be afraid, because again, if it pops on earnings, that's just even better.
Exactly.
And quite frankly, even if it drops on earnings, all you're doing is just getting it at a discounted price. Is really all it is. But
right.
The patterns here showing that between now and December, you want to pay attention to these type of stocks.
Right. Right. Okay, we're getting to the top of the hour, and we've got that speaking engagement from John coming up at the top of the hour. So before we get too pressed for time, let's go around the horn, reintroduce ourselves a little bit, and let people know exactly how they can get a hold of you. And if you have any special offers, this is a great time to extend it. So let's start out with John Thomas. Is he back in the loop here?
Yep, I certainly am.
Okay.
And you can reach me at www.madhedgefundtrader.com. On the homepage, there is a sign up for our free daily trade alert service, and you won't get any better offers than free. But we're only going to have the free link up for another 30 minutes. So if you want to get our free research on all asset classes, including stocks and Bitcoin, go to madhedgefundtrader.com.
Sure. And it was great to talk to you again, John, always is. Let's switch it over to Michael. Michael, again, a reintroduction and how to get a hold of you.
Sure. Again, Michael Philliguerra, and I am with logicalsignals.com and tradershelpingtraders.com. I produce two video updates, one on the NASDAQ 100, the other on the S&P 500, both on the futures. And we can use, or actually you can use the following address, and I believe that David's going to put it in the chat box, and that is www.logical-signals.teachable.com. If you go there, I am running a Black Friday special. If you've ever had an interest in a day trading room or a trading room, I'm offering a 50% discount on the monthly charge for the trade room. If you want to come in and check us out, we are day trading in the NASDAQ 100 and the S&P each and every day.
Great. And Wally, again, you do a lot of quantitative analysis, and you also teach people how to do it as well, which is very good. So again, how can people get a hold of you and that kind of thing?
Absolutely. So rightsideTrading.com, right side trading. Just think about the right side of the chart, rightsideTrading.com. And like you said, what we did was we took all the quantitative analysis and technical analysis, merged it into our platform, our software, where you can log in anytime, any day, and just pretty much see what the data is telling you, whether you should be. There's only 4 things we look for: whether we should be buying, selling, whether we should hold, or we should be placing stops. So when you look at it that way, and then compile that with seasonality, knowing which stocks are ready to move ahead of time, it makes trading very, very simple. So rightsideTrading.com is our website.
Sure. All right. And I'm optionprofessor.com, OPTION professor.com. And each week we have a update, plus we have alerts that we send out on the stock market, interest rates, the gold, silver, oil, and crypto. So there's a lot to learn from us as well. It's free of charge. You just go over to the website, optionprofessor.com, put your email in, and this Friday, you'll start getting updates from us each and every week. and optionprofessor@gmail.com. You can send us any question you might have. Okay, thanks everybody for being here. I think we offered a lot of good information here in our opinion. So let's see again how we can do these talks we're going to have throughout the week so we can educate people more. And I'm going to send it right now back to David Cosmeter. And thanks a lot you guys for being here again.
All right, thanks guys. Lots of good info today. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube or your favorite podcast app. Or you can also just go to TimingResearch.com to get access to this event or this episode as soon as I can get it posted, as well as any of the past shows or episodes. And we are starting our Synergy Trader event immediately after this one. So we're going to take a break for a few minutes, but we have John Thomas up first. He will be talking. And then we have 36 presentations throughout the next few days. So Wally will be on tomorrow, and Michael will be on Wednesday, and the option professor will be on Thursday. So yeah, so we have a great lineup for you. So all right, so just want to thank my guests again for today. John Thomas of madhedgefundtrader.com, Michael Philliguerra of logicalsignals.com, Wally Olopade of rightsidetrading.com, and the option professor of optionprofessor.com. And for those of you in the live room, just hold on a few minutes and we'll be back with the start of the Synergy Trader event.